Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Robinhood. Should you buy, should you sell, kind of what's going on with this company. So I hope you guys enjoy it, and overall I hope you guys get something of value out of this video. And if you do, hit that like button, subscribe to the channel, and guys, we have some news. We are going to be creating a investment journal. I'm super excited. I'm actually in the works right now of publishing it, so it may take a couple of weeks for me to fine tune it and then release it to you guys. So I hope you guys enjoy it. So stay tuned for that. So let's jump into it. Now, for those of you that don't know what Robinhood is, you must be living under a rock, because Robinhood is by far one of the most popular stock market brokers. They pretty much allow you to buy and sell different types of stock. And for beginners, it's a fantastic app to just start trading, but there is a lot of cons to Robinhood, the company in general, and the app. Now, when you sign up for a standard broker's account, so there is no tax advantages, there's no tax loss harvesting. It's just more of a beginner-friendly app that allows you to buy and sell different stock. That's pretty much it. And the way that Robinhood makes money is from order flow. So they will actually send their orders to other like hedge funds and anything companies like that, and then they'll get a couple cents per trade, which if they have millions of users, it adds up very, very quick for them to make money. But Robinhood did release their IPO a couple of months ago, and this is pretty much just allowing the public to purchase shares of Robinhood. And as you can see, right when we did that, we had this huge spike. And you can see, if we go to the yearly chart, you can see it a little better here, where the stock pretty much went from $30 all the way up to $85. And everybody at the time thought, oh my gosh, this stock is going to $100, it's going to the moon. And it didn't, right? The stock slowly started to kind of sell off and consolidate, and really kind of hung around this $50 mark for quite some time. And then it just got absolutely slammed over the past couple of weeks. And looking at it, I kind of understand why we've seen a lot of sell-off. One, Robinhood was extremely overvalued. And if we actually go ahead and look at the earnings here, so this is Hood earning, this is Robinhood. You can see, right, we have a 35% increase on revenue, which anytime you have that much growth in revenue, that's fantastic, right? But that's really the only good thing that this stock has had, right? So you can see good solid growth on the earnings. Net income is down like 10,000%. The diluted earnings per share is down about 4,000%. The net profit margin, this is by far the worst thing that Robinhood has. The net profit margin is negative 360%. So what this means is, for every $100 that Robinhood brings in for cash, they don't profit anything. They actually lose about $360 for every $100 they bring in, which a company like that is not going to survive. It's not going to grow. It's not going to thrive. And it's not going to be able to reinvest into the business, because there's no leftover money to grow the business. And that's what we've seen, right? Over the past couple of weeks, just crazy amounts of sell-off due to very little money and a lot of controversy on third-party execution and stuff like that. Not to mention, if we look at the earnings calls, you can see the past earning call was absolutely terrible. Right. So you can see it was expected to have a 0.26 when it reported a 0.49, which is a 91.7% surprise. Which is not good at all. Not to mention, on the revenue side, yes, they had good numbers year over year, but the past quarter wasn't the greatest, right? It was, hopefully, they were expected to have about $377 million, but they reported about $362 million, and that was about a 4% surprise, right? So anytime you have missed earnings in general, you're just going to have a lot of natural sell-off. Not to mention, guys, Robinhood really was one of the first stocks to start off commission-free trading. Now, guess what? Everybody has it. And anytime you have a saturated market with a certain product, the consumers have the advantage, right? Because they can pick and choose the broker that meets their needs. And honestly, Robinhood is a very, very beginner-friendly friendly platform, but they lack a lot of stuff. If you wanted to open a Roth IRA or any traditional retirement accounts, you can't do it on Robinhood. The only thing that you can do is open up a standard broker's account and just buy and sell stock. And not to mention, they are constantly in the news, right? Remember during the GameStop and AMC short squeeze where they pretty much caused or pretty much halted trading on that because their hedge fund that they go through for order flow, they said, hey, we're shorting GameStop, so you can't buy GameStop, which was causing a massive amount of sell-off, and everybody was getting mad, and it was just a terrible time. And that's the thing. When you have a company like Robinhood that is trying so hard to kind of make money, it's not going to survive. They need to kind of go where the consumers need to be. Like a company like, in my opinion, like a company like this, like Sophie, is a way better pick in my opinion, right? It has some resistance at 28. Support here is pretty much anything under $13. And this company in general makes a lot more money. They're growing on the net profit margin. The company's not profitable, but they're honestly working on it, and that's what we need. We need to see steady growth at it. So in a couple of years, the company's profitable, they're making money, the stock's up. That's what we need. We don't need a company like Robinhood that's pretty much just burning through capital. We want a company like this. Sophie, they have debit, credit cards, they have student loan refinance, they have home refinance, a whole bunch of things. Not to mention they have Roth IRA, 401k, traditional brokers accounts. They have a lot more things than Robinhood. So where do you think a lot of people are going to start canceling their accounts and moving to? Is Robinhood. They're going to cancel the Robinhood and move to a company like this. Why wouldn't you? It wouldn't make any sense not to. So looking at Hood, I definitely think for me right now, it's way too high of a risk tolerance to make any money off this. This right now is a sinking ship. There's no major support. It's just natural sell-off. And honestly, what I would recommend doing, and I bought shares. It's not like I didn't own it. I'll be completely transparent with you guys. But what I did is I only put about 1 to 2% of my portfolio into a company like this, just because I kind of knew it was more of a higher risk, higher reward play. So yeah, I still have a couple of shares. My average cost is terrible at like $35 or something insane. So honestly, I'm most likely just going to hold it because it's only 1 or 2% of my portfolio. And if I lose it all, it's only 1 or 2%. But if it goes up, and probably if we get it at like 50 or 60 bucks again, I'll probably sell out and move money somewhere else just due to opportunity cost. When I have money in Robinhood, I am missing out on opportunity elsewhere. So that's kind of the thing right now with Robinhood. I wouldn't recommend investing in it. So that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe, and we will see you later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.